Hey guys, welcome to another Trade Genius podcast. Bob and Phil here as usual. Guys, inflation, big problem, but it was all by design. What do we mean? Well, we're going to get into it in this video. Let's dive in.
Trade Genius.
Okay, Bob, before we get into the culprits behind the inflation, we'll also take a look at like where we are with this market because things are getting really stretched here. But yield max, we got a lot of good feedback on the yield max products, and it's almost like these returns are too good to be true. But I mean, obviously you have to manage the trade setup correctly. But they've also come out with some new products. Can you explain those?
Yeah. And guys, these aren't too good to be true. This is what happens when you properly apply leverage in a very, very professional manner. And, we shared the strategy with you. The strategies work. But today, when we told you there's these inverse yield max products are coming out, the next one came out, the inverse of Coinbase, which is called Fiat, F-I-A-T. Coney's on the long side. And just so you know, our position right now, you should still be 100% long Coney and Coinbase. Hasn't broke any levels yet, and you're going to be able to pick up nice premium. But you can follow along with us on these trades. Just go to tradelikeagenius.com, check it out. You guys will be astounded on the yields of these products, and they're just going to get better. These guys know what they're doing, and they're making the product better every month. So check it out. Now, back to our story is that we want to show you, and we've been telling you guys, here's just another proof point. When the Fed cuts, it's not happy times are here again. It's time for you to get max defensive. And we told you that there's a potential for a July cut, but almost certainty for a September cut. Unemployment rates are creeping up. And we think today, the way they ran SPY up so hard, ES up so hard, we think they're front running a soft CPI number tomorrow. TLT is also getting some traction too. And if this does what we think it's going to do between now and the middle of September, when the next meeting is in for the Fed in September is that we're going to get a cut. And then that marks really the top of the market. Who cares if you're off by a week or two? If they buy into that rate cut, you want to be the seller of that rate cut, not buying along with all the other idiots. Okay, here's the chart that shows you what happens at a rate cut. It is almost 100% correlation, okay? And the way they've been running it up here lately, I mean, you have crazy price action on some of these stocks are up 20, mega caps are up 20, 30% since the beginning of May, okay? And the next chart we're going to show you kind of goes along with that, Phil. This is the S&P 500 against the equal weight. And this thing should give you freaking alarm bells. It means that everybody's piling into one end of the pool and everybody's on one side of the boat. And when this thing snaps back, it doesn't mean we're going to have rotation. And even if we do have rotation, Phil, the mega caps will overwhelm the other indexes and it'll actually cause them to sell the companies that want to rise into that. And so this is a big problem. And this happened before. Every time this happens, there's an event and these guys run it up into the event. Remember, big money needs stupid people to be able to sell to so they can get out of their position with profit. And this is happening once again. Again, we have a window here. We're in the 60-day zone here. 2 weeks here is OPEX. We may get a pullback into the end of July, and then we're going to ramp right back up again into August if we don't have a July rate cut. So just bear that in mind. And the last thing I'm going to talk about, and Phil, I'll let you do this slide too, because we knew this whole thing's a setup. I know a lot of you guys think COVID was a setup. I agree. Okay. Not so much to COVID itself. It says that they responded to a very, very vicious, unique flu, and they used it as an opportunity to reliquefy the banks. So just what these guys were saying before COVID. Check it out. Hey everybody, it's Bob with Trade Genius. Usually I do fun ads. I talk about our service, but I want to be serious with you for a second. We've been helping a lot of people trading for a long time. As you can see here, I want to let them do the talking for me for a change. But most importantly, we want to help you too. If you've not joined our service yet, come check us out, tradelikeagenius.com. Full service. We have chat room. We have the algorithms for you. We give trades out every day. We educate you. So go to tradelikeagenius.com. Check us out. What you get out of our service is much, much more than what you put into it. And we'd like to see you in the room. Thanks for listening.
Yeah, so I mean, it's interesting. If you look at these headlines, they're all complaining about low inflation. Like, no one remembers that, right? They were complaining about low inflation. Now they're complaining about high inflation. But the point is that they were priming everything because they had planned a bunch of money printing. COVID was perfect cover. Banks were in trouble because in September, we started seeing things like the repo window open, which is strictly a liquidity window, should not be open. A lot of the times in the history of the markets and the Federal Reserve, there is no repo window. You only see it in times of distress, like in the great financial crisis. Then it went away for a long time. And then in 2019, a few months before the COVID pandemic, they reopened it. Why? Well, banks were in trouble. But you notice here, Yellen's only regret was low inflation. And then Powell takes over. He says one of the major challenges of our time is low inflation. New York Fed President John Williams says low inflation is the problem of this era. Daly says, don't be fearful about too high inflation. So, they have this, they're priming you, right? For that, we got to get inflation back up. So, and, then we got into, which isn't on this particular slide, but, inflation is transitory. Remember, we heard that. And then all of a sudden, we got to retire the word transitory. So in classic Fed speak, right, they're just basically running a charade. The real intention was to liquefy the banks, as Bob said. They ran cover under COVID. And now that we're past that point, see, now they got the banks to a point now where they've made it past the hurdle. Now they can hold. Remember, the big story here is that banks have all these underwater bonds, right? All these, huge amount of bond holdings are underwater. Well, now they've gotten to the point where the banks that are going to fail have failed, and these guys can now get through the next part of the cycle, which is declining rates, meaning that bonds are going to start getting bid up, and that's going to bring those guys back to par on their holdings on the bonds. And that's really what this is about. And once that's done, we'll be out of the next funk in this recession. But make no mistake, they're talking about getting inflation down and this and that. They're really prepping now for a recession. They can't say it though. If the central bank says, hey, we want a recession, that's going to freak out the markets and the algos. It has to be done in a way that doesn't get disorderly. And then today, Powell in his testimony in front of the House said that housing prices are going to go back to pre-pandemic levels. I don't know about you, Bob. I don't think I've ever heard a central bank chair predict housing prices dropping by 40%. So I thought that was kind of eye-opening as well. Didn't get a lot of press or headlines off of that statement. But I think, again, if you read between the lines and when these guys are squirting out these little side headlines, they're kind of telling you what's going to come. And so I think they're just slowly, we talk about soft landing or hard landing or no landing. I think this is a soft transition, or as soft as they can try to make it, into a recession that's going to last longer than most people in this current generation have not experienced, unless, you've been an older investor, Gen X, boomers that have seen one or two recessions in your adult lifetime.
Yeah, I've been checking his IP address on his searches, and he was at our website, Phil. I'm not going to sue him this time. I'm going to let him off the hook. But look, guys, whenever the Fed speaks, they're not talking to you. They're talking to their masters. Okay. And their masters were telling them they have to increase inflation because they won't survive, because that's who their boss is. When they speak to Congress, they're speaking to their lawyers, telling them that, see, we are doing our due diligence. We are warning the people. So don't yell at us or sue us when things go awry, because we did warn you. So this is all a big joke. We know about this. We've talked about this ad infinitum. And that's why you always have to do opposite of what they're telling you. So they're complaining about higher interest rates, higher inflation. They don't necessarily care about that. The only time they care about high inflation is when it starts affecting the ability for the banks to monetize the collateral during a recession. And that's when they're going to start cutting. If you sat there and you actually ran a business this way, they would have been fired decades ago. But that's not the job they have. Their job is to maintain and preserve the primacy of a private banking system running our economy. And this is just the next phase. Do I get upset about it? Absolutely not, because there's nothing I can do about it. But what I can do is make sure that I'm not a victim of it. And that's why we share this stuff with you guys. And nothing's changed in our viewpoint, Phil, right? We still think Bitcoin has a move. It's starting to spark a little bit here, which is interesting to me. We still have a 2 to 3 week window here while while the matches dry out, oil is in a seasonal period of lift. I think we're going to continue to see oil moving higher, and we have the blow off top coming in the index as you see it. It needs to broaden out a little bit more, which I think will happen in the after the OPEX in July and the Fed meeting in July. I think there's going to be an August event, and then from there in September, just get ready to get defensive. But we're making all the right moves. We're doing all the right things, and even while we're waiting, we're making money because we're in dividend paying stocks that exceed what you would normally expect to get in the stock market. So with that, Phil, I'll let you guys go. Thank you very much. Check us out, tradelikeagenius.com. We'll definitely help you navigate these markets. And Phil, just anyway, I'm going to read an attaboy for Phil. I wish this was my call, but Phil told people to get in Wolf at a very, very low price. And we had a blow off move. I think, Phil, you made 300% on that move. We're pulling back into support. We'll share with you guys again when Wolf's ready to take the next big move higher. And Phil called another one out to keep an eye on. We'll give you a freebie today since you waited to the end to hear this. But SunPower is also a highly shorted stock that's also giving buy signals. So there you go. You paid nothing for this podcast, and hopefully we'll make you some money. And if we do, reward us by joining us. Have a great day. We'll catch you guys later.
Trade Genius.